literally since January. We've been talking about how, there's been this rotation between, from growth stocks going into value and cyclical plays, and we still stand by that. I still think that it's worth holding on to those, but there's definitely a shift happening. There was this huge fear of inflation, permanent inflation, and literally this whole time Jerome Powell's been talking about how he feels that it's going to be transitory, it's not going to be a big deal, and there's been so many people basically saying that he has no idea what he's talking about. And this past week, we talked about it last Stock Watch Sunday about how the CPI numbers were going to be coming out for May, and they did, and they ended up coming in at levels that we hadn't seen since 2008. So 5% inflation numbers came in, but it was an interesting, reaction. We saw tech stocks go crazy, which isn't what we normally saw when we saw numbers like that. We saw them for the April numbers in May, and it was like the tech stocks got bludgeoned. Yeah. This time around, it was a little bit different, and I wanted to show you guys the chart here that I have pulled up. This is the 10-year yield, and this is something that, and I'll show you as well if I'm in Zoom. So this is something that I thought was very interesting. The 10-year yield is in a downtrend right now. It's been in a downtrend since April. Really, since it hit those highs in March, it hasn't been able to rise above that. And I think that there's a lot of people that are realizing, a lot of investors that are realizing that perhaps this is transitory. Those CPI numbers that came out, a third of that was made up of used car sales. And that's something that's not going to stick around forever.
Car lots.
Yeah, car lots. Yeah, right. So I think that this right here, the chart that you can see right there, that 10-year yield is definitely going to play a factor. There's now people arguing that this sees at 1.25%. Which is crazy to me because everybody has been talking about how this thing's going to go crazy. And I thought, and it got close, I guess. I thought that we were going to see 2% out of the 10-year yield. And now it's struggling to stay up above 1.5%. Obviously, we still have 6 months of the year left to go. So there's still room for that to move back up. But, if this does move back down to the 1.25%, that makes growth stocks, tech stocks way more attractive now.
Oh, huge. Yeah, because growth stocks and tech stocks, their future value of money, right?
Yeah.
And so, and they're huge cash piles as well because they typically don't really spend that in general. So the future value of money, essentially, if it's going up, they're not able to spend as much, right? Their buying power essentially has gone down.
Correct, yeah.
And then the inverse happens. So if the value's going down, there's more they're able to do with that cash on hand and there's stockpiles. And you look at companies like Facebook and Apple, they have the
ability to grow faster.
Stockpiles, yeah. So the dollar goes further. Bottom line, regardless, these companies are going to do well, but the movement, and it's already happening. And we talked about this. I mean, last week in Stock Watch Sunday, we discussed the perfect portfolio, which we've been saying a long time. Like one of the things we said was exposure, 25% tech.
Yep.
And making sure you weren't out of it, but not over leveraging tech. And we've been saying that for months. But now I think the reopening plays are running so hot, it's the flip. Don't get out of reopening. I'm not going to get out of reopening.
No, yeah.
It's not advice, guys.
Yeah.
I'm not getting out of reopening, but I'm focusing more capital towards the tech. And I've already been making that move.
Yeah.
And we're already seeing it. And we did, I think it was 3 weeks ago, we did our top 10 stocks that could bounce back. We have a couple on our top 5 today. But it was the tech stocks that we were looking at. And so we see a couple of them today have already made the move. But there is still so much meat on the bone, as we like to say.
They've gotten beaten down so much. I mean, we talk about Apple that's down 40% from its highs, and a couple of the other tech stocks that just don't make any sense.
40% down 40% from its highs? I
don't know if it is as of Friday, but I know as of beginning of the week this week, it was somewhere around there. So I mean, I know Tesla was down 45 at one point from its highs.
Yeah.
So not quite 50%, but pretty close. So there's just a lot of tech stocks that gotten beaten down. I mean, and we're going to talk about this in a little bit on one of the stocks that I'm bringing up, but we saw DocuSign and how they basically showed everybody, hey, the growth isn't slowing down for them. The demand is still there.
Yeah.
And so it'll be interesting to see how the upcoming earnings season, which is just a couple of weeks away, plays out with some of these growth stocks, because I think that's going to surprise a lot of people.